Today's top stories at NBR. Fisher Funds follows the pace set by other fund managers. Dicker Data becomes the second largest player in the New Zealand market. Smith City isn't ruling out a move back into the Auckland market. And there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Thursday, August 5th. I'm Paul Brennan. Thanks so much for joining us. Wealthy hoteliers, the Pandys, have bought a landmark Auckland mansion once owned by the Nathan family. An entity associated with the head of the Pandy family business, Prakash Pandy, has bought 43 Arnie Road in Remuera, a heritage-listed property known as St Anne's. The 6-bedroom, 4-bathroom home on a 3,062 square metre site sold for $14.15 million, 15% more than its CV of $12.25 million. St Anne's was built in 1914 for Charles Isaac Nathan, son of Arthur Nathan, who founded the trading company A.H. Nathan, which once had shops across Auckland. They were cousins of the founders of retailing and brewing business L.D. Nathan. The Pandys are embroiled in a battle with independent owners of rooms in Auckland's luxury Sofitel Viaduct Harbour. Fisher Funds has followed the pace set by other fund managers in 2021, with strong increases in revenue and profit after its funds under management grew by nearly $4 billion. The fund manager bounced back from a dip in 2020 to post an after-tax profit of $42.2 million in the year ended March 31st. That was up 18% on the previous year and came as revenue increased 17% to $125.9 million, according to its latest accounts. Performance fee income similarly grew after dropping from 2019 to 2020, up by nearly a third to $23.3 million. ASX-listed Australasian wholesale distributor of computer hardware and software products, Dicker Data, has become the second largest player in the New Zealand market with the purchase of Auckland's Exceed. The Australian $68 million deal to buy the local firm comes 4 years after Dicker Data first entered the New Zealand market, with a $65.5 million Australian purchase of Australia Express Data, which came with a New Zealand subsidiary with 95 local staff. Founder, Chief Executive and Chair David Dicker joined the NBR's Dita Deboni.
We bought Express Data in 2013-14 and they had an operation in New Zealand, so we inherited that as part of the deal. So we've been running that. It's been going okay, but it wasn't that large and you want to expand to improve your position. So obviously the way our industry works, you got to do it by acquisition because of the vendor alignments and all the other stuff. So Exceed was always a target there. So you're always trying to do it if you can.
David Dicker, founder, chief executive and chair of Dicker Data with Dita Deboni there. Research released today by the Financial Markets Authority shows nearly a third of people using online investing platforms made an investment in the last 2 years simply because they feared missing out, while about the same proportion hold cryptocurrency. But day traders make up just 2% of investors, with the majority of nearly 2,000 people surveyed saying they intend to hold their shares and other investments for the long term. Joining the NBR's Maria Slade was FMA CEO Rob Everett.
The risks are that people don't understand the pitfalls, and we've had a market that pretty much has relentlessly gone up for 10 years, and a lot of them won't have experienced very choppy markets where things drop very suddenly and stay down. So the fear is that the positivity that's been created might lead to people overexposing themselves and suffering losses that they can't afford to suffer.
FMA CEO Rob Everett with Maria Slade there. The Treasury has warned the government it can't improve the housing situation without making short-term regulatory changes to make it easier for land to be developed. Papers prepared for Finance Minister Grant Robertson before the May budget said that despite the large investment in this year's housing package, it was likely conditions would get worse, not better, for renters. But budget papers released by the government today suggest that spending would only have a limited impact if changes are not made to the regulations governing housing developments. The Treasury urged the government to not wait for the reform of the Resource Management Act and instead make short-term regulatory changes now to help alleviate the housing crisis. As homewares retailer Smith City announces its newest South Island store, Chief Executive Tony Allison isn't ruling out a move back into the Auckland market. The Christchurch headquartered retailer is building a 2,300 square metre store in Hornby in the city's rapidly growing southwest. It will be the formerly publicly listed business's third new store opening since being bought out of receivership by investor Colin Neal's Polar Capital last year. The furniture and appliances retailer pulled out of Auckland, where it had failed to gain traction, and said it was going back to its regional New Zealand roots. But Allison hasn't given up on the country's biggest city. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, in Hunter's Corner, Tim Hunter analyses Jack Dorsey's plan for world domination, while KiwiRail CEO Greg Miller spills the beans on its investment plans. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place, right here from 5:30 and right through the weekend for another NBR This Week.